Well, good morning, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Tuesday, September 29th. It's almost just a day or two away from the last day. I think this month has 30 days. So tomorrow's the last day of the month. But we've got the debate today. We've got Biden versus Trump. One guy doesn't really care to pay taxes. And the other guy, I don't know if he remembers to pay taxes. I'm just playing around. That's a joke, okay? So just wanted to kind of start today off on a light note. We've got a lot to talk about. We've got world tension. We've got global economy. We've got a top stock pulling back. And we've got the moving averages on the main indices right at the 50-day line. So there's a lot of stuff to talk about today. Let's get into it right now. So the first thing, and a really important thing here, is global stocks dip Tuesday as investors looked ahead to the debate that's happening tonight between U.S. President Trump and Biden. Oh man, I can't wait to watch this. Investors await Tuesday's 90-minute television Trump versus Biden debate. It comes amid tension with China and rising COVID-19 deaths. The tension with China, that is something that Trump is really pushing at right now. That's a trade war issue. But in terms of the COVID-19, that's not something we can control. And that looks like we're going to have another resurgence going into the winter because there's no vaccine that's going to be out in November as we thought. It's going to be at least first quarter of next year, which means we may be in for a rough ride. And that means those stay-at-home stocks may be coming up again. Markets are watching the election impact on tax policy and how long it might take to determine a winner. Today's debate is going to be big because it's going to really show us who is in control, because this is a tight election, very close election, and we'll see how the public's perception of Trump in light of the recent disclosure on his taxes will have on the economy or his presidential race. But you know, Trump has been able to shrug just about everything off. I remember 4 years ago, the exact same time, the New York Times came out with the expose about him and I forgot her name. How quickly I forget, the stripper who he allegedly hired, and it didn't have any impact on his report on his election. So we will see. Tech stocks led an early rebound, but investors are worried that they're overpriced. And the truth of the matter is, whether they are overpriced, but that hasn't stopped tech from going up higher. There's a certain pricing factor that's priced into expensive stocks and momentum stocks, and it's going to be here for a while as long as the market stays bullish, which we will talk about soon. Investors' confidence has been supported by infusion in central banks' credit into struggling economies and hopes for development of a COVID vaccine, and there isn't one right now. A monthly unemployment report is due Friday, and we have jobless claims on Thursday, and it should help shed light. And remember, folks, we've got the biggest report of the quarter tomorrow. We've got the GDP. In terms of today, we've got goods trade. That's coming out about a minute or two. We've got consumer confidence. That's going to be really big because consumer spending accounts for 2/3 of what goes into the GDP. So if consumer confidence is really, really strong, it might have made a difference on the GDP. Now, the GDP, remember, we were at positive 2% inflationary growth. Now we're looking at negative 31%. I mean, it's just awful. It's just terrible. So anything better than 28%, anything below 25%, that would be interesting. Then we've got jobless claims, we've got personal income, and we've got the employment situation. And again, the jobless claims has been below the 900,000 4-week moving average, but a lot of analysts are saying that it's sticking to those levels and it's not dropping at all, and that's a big problem. And if we see the COVID-19 rear its ugly head, because look, we've got winter coming right now, flu season. COVID is worse in winter. It's just like the flu than it is in the summer. So people in Europe are getting sick. They're having close downs in Europe again. And if this happens in U.S., we're not going to be in a good place. Now, let's talk about market technicals. Right now, if you look at the Nasdaq 100, we just crossed today above the 50-day moving average again. Now, Please, please, please pay attention to what I'm about to tell you. This is pretty important. I like to wait for the market when it crosses below or above an important average like the 50-day moving average or the 200-day moving average. Just because it crosses doesn't mean anything. What I want to see is 2 days completely above where the low doesn't touch the red band. You see these 2 days right here? This was the 14th and the 15th. That's what I want to see. Notice the bar is above the red band. I'll even go a little closer so you could see. See here, both this day and this day, the 14th and 15th, they're trading completely above the band. I need to see the Nasdaq close 2 days in a row where the bottom doesn't touch any part of the band. If the bottom of price action doesn't touch the band after 2 days, we're good. Similarly, if I'm looking for a bear market, I'll wait for the market to trade 2 days below the 200-day moving average. We're not there yet. We're in the twilight zone, as I'll show you right now. We are simply having a little shakeout. But let me go to 200, and I'll make this, how about we make this a green line, all right? There we go. So we're still far away from the 200-day, but basically, to see whether we're bullish, I like to see the market close for 2 days above the 50-day line. And if it closed for 2 days below the 200-day line without any upper part of price action, just like it is here, or these two bars right here, on the 25th and the 24th. But I'd like to see it here. But we're not there. So let's just talk about the bullish trading action. Again, notice it's already touching the bar. So today can't be that day, and we need 2 days. So I want to see complete clearance from the lows of touching the 50-day moving average for 2 days in a row. Now that's the Nasdaq 100. Now let's look at the SPY. The SPY is a little weaker. It's still trading below. So if it trades higher, I want to see 2 days like this. Again, this is the 15th and the 16th on the SPY. I want to see 2 days. I want to see 2 days above the 50-day moving average. And again, if we go lower, I don't think we will, but if we do break lower, God only knows. We're in an unforeseeable territory right now. If we break lower, I want to see 2 days below the 200-day moving average, where the close is like this, not touching any part of the bar. So for a bullish, I want to see none of the lows touch the 50-day moving average. And for bears, I want to see no part of the highs trade or touch the 200-day moving average. And right now, we're still treading water. We're still kind of below. Now, I'm going to give you a big clue and a big tip right now. This is the September 2nd. This is when the S&P made new highs. I would not be looking for stocks to go long right now unless the stock traded above its high on September 2nd. To give you a couple of good examples, let me show you what I'm talking about. Look at Roku. This is September 2nd. See, September 2nd, it made a higher high and it went higher. I like that. Let me show you Peloton. How do you spell Peloton? P-L. Let's see. Here we go. This is why I think the market will continue going bullish, because here's the second. Is that the second? No. This is the second. Sorry. And look at this. 3 times. We went higher twice afterwards. So the S&P made a high on September 2nd, and then it broke. Again, I'm going to show you the S&P. See, it made a high on September 2nd, and every high is lower. It's broke down. But if you look at Peloton, or if you look at Zoom, the stay-at-home stocks. See, this is the second. No, that's the first. That's the second. But look at what happened. Made a higher high. So I like stocks that made a higher high after September 2nd when the S&P peaked out. That's telling me the stock is completely bucking the trend. And to show you some of those stocks right now, and I've got one special one for you, but I want to show you some of those stocks that are doing that right now, just to give you a visual. There's 56 stocks making 90-day breakouts. So to give you an example, DraftKings, higher high than the second of the month. Pins, higher high than the second of the month. TTOM, higher high than the second of the month. UPS, I love UPS right now because it's been basing, going sideways, and it broke out finally. Run, higher high. Target, let's see here. Yep, higher high. DRI, higher high. CINA, higher high. SGMS, higher high. VSLR, higher high. These are 90-day breakouts. But again, I want to make sure that the high, I like this, Boyd Gaming, looks really good right now. I like to see stocks that took out the high, the previous high that was on September 2nd. So right now, you want to stay away from stocks that are trading lower than they were trading on September 2nd. And again, 90-day breakouts is a really, really good way to look at it. But for today, I've got something good for you. KB Homes. Now, home builders have been really, really strong. Why have home builders been really strong? Because interest rates are near historic lows and they're not going to go higher for a couple of years. This is KB Homes. This is called a 4x4 pattern. We make a 90-day high, and then we have 3 days that are selling off, followed by a really strong up day. So we've got a 90-day high, followed by 3 down days, followed by a strong up day. And notice, price has maintained above the 50-day moving average, and the second of, let's see here, when's the 2nd of September? That's the 2nd. The high was 37.13, and here the high was 40. It took out the high of September 2nd when the S&P peaked out, which tells me the stocks got more upside. And other stocks, there's substantially more stocks today showing strength, which is telling me there's a really good probability that the Nasdaq and the S&P are going to go higher once again. I would be putting a buy stop right at the 39 level, and if it breaks the moving average, the 35.80 level, I would get out. KBH. All right, now folks, I shared a lot of stuff with you today, but I've got something really, really, really time sensitive, important, and something you really need to pay attention to. This is so important that I'm taking a private plane tomorrow to do this with Jeff. This is something you've got to pay attention to. I cannot hold my excitement much longer, really. This Florida man has insisted to me that you should never look at a chart after the 3rd trading day of the month. He only looks at charts for the first 3 days of the month. Get that? Weird, right? But after the gains he's shown me, I'm starting to think that this guy's onto something here, and I know he is. This guy's a brilliant trader. He says most folks don't understand how global events, the kind that panic most traders by causing sweeping change, can help you earn thousands of dollars month after month. Man, I love how this sounds. All by entering one trade on the exact same day every month. You enter on the 3rd, and then you get out on a specific date, and you're done. No watching the market all month. No sitting there in front of the computer doing this all the time. You get in on the 3rd, and then you get out at the end of the month. That's it. That's it. Triple-digit gains. Simple, clean, institutional trader. Click on the bottom of this page to see how this strategy can literally help you make thousands every single month. I'm not kidding. You enter on the 3rd, you get out at the end of the month, nothing else to talk about. Simple, clean, effective. And this guy will show you how global events are connected, how institutions are accumulating. You cannot afford this. He is a hedge fund manager who's traded with some of the best. The best, all right? Folks, do not miss this. I'm catching a special flight. I'm catching a jet early tomorrow to Miami to hang out with him so I could see all this and talk to him about it, interview him. You don't want to miss out on this, all right? Follow the link below. Learn all about it. Do it now. Have a great day. Bye, guys.